Hey there, and welcome to this weekend's premium newsletter. So, what a difference a week can make. Last week we were watching an extremely boring tennis match between 250 and 260 billion, but this week we saw an absolutely tremendous move of 24% from 254 to 333 billion. Now, I will be the first to say that it is too early to call the 244 billion low we saw on April 1st as the bottom for this bear market. But many pundits are starting to call for the return of the bull. As we covered on Thursday, this rally was the result of a short squeeze after we hit a record number of shorts on Bitcoin. While this rally has been impressive and certainly helped to give the holders a sigh of relief, we're still watching for the true rally to start, similar to what we saw in November of 2017. For now, this rally has not been as violent to the upside as our bounce off the bottom in February. And what's worrisome is the market volume has predictably dropped off over the weekend, which might cause a reversal or consolidation. With that said, we are watching to see if this market can sustain the move, or at the very least sustain this level. At the very least, if we can consolidate here, it will help to return faith in the system and in turn move money back into the market. While we don't put a whole lot of stock into crypto experts who are just hedge fund managers or similarly vested individuals with very clear ulterior motives, a number of them have come out this week with very bullish sentiments. Noted Bitcoin bull, American venture capitalist investor, and businessman Tim Draper has a 2022 target price of $250,000 per Bitcoin. CNBC Fast Money's Brian Kelly has supported this prediction in a CNBC interview from yesterday, while Tom Lee of Fundstrat has a 2018 year-end target price for Bitcoin of $25,000. Finally, Pantera Capital has called the most recent bottom as the definitive bottom of this bear market, and that everything going forward should be upwards. Again, we don't put a lot of stock into predictions, and we certainly don't endorse putting up a random number as some sort of indication of where Bitcoin and cryptocurrency is going. For example, saying Bitcoin will be above $250,000 by 2022 is meant to get you thinking about the number itself, but not its validity. There's so many variables to consider, so many independent events that can and will occur between now and then that the price is by far the least interesting thing to think about. For example, what regulations will begin to form over the next 4 years? What will the world's economy look like 4 years from now? Will Bitcoin still be the #1 cryptocurrency? For it to be worth above $250,000 and not be the #1 is certainly exciting to think about. We have to wonder then, what would be the #1 cryptocurrency? How will have crypto made progress towards adoption? For Bitcoin and other cryptocurrencies to continue to rise, we're going to need to start transitioning from speculative value to utility value. We're going to need to start making blockchain practical and usable. As it stands, the biggest challenges around blockchain's adoption are around the interface for users and the technology itself. We are very close to having a payment method that is many times faster and more secure than traditional payment networks such as Visa or MasterCard, but we are still far away from having something that is as usable as today's credit card or payment terminals. That being said, Bitcoin could certainly hit $250,000 by 2022, but we need to focus on all the years, months, and days between now and then. In summary, we are by no means out of the woods yet for this bear market, but things are definitely looking brighter than they were even a week ago. It's still too early to call a double bottom recovery, but as we get into the summer, crypto could see a similar upward trend we saw last year at the same time. Now I'll turn it over to Doc for his thoughts. Have a great rest of your weekend. Talk to you this week.
Hello folks, this is Doc for ReadySetCrypto. We'll start out today's report looking at just a price and volume chart of Bitcoin. And so again, if you go back a week ago, we got right back there. I said that, hey, look guys, it looks like we're just about ready to pop to the upside because what we have is we have positive divergences. We have a tremendous amount of energy showing. We're breaking this short-term trend line, and I expect to see this upper trend line here tested for at least a swing. So that's what we got, maybe a little bit more than that. So right now everybody's getting excited about perhaps this is the bottom, is in. Perhaps this is the dawning of a new renaissance for Bitcoin after all of this bear market that we've been through over the last several months. That would be awesome. So let's be objective about this. Let's understand what kind of framework we're going to use to make decisions from this point forward so that we can know when we should start to get more aggressive with this. Otherwise, we're still going to be chasing things downstairs if we're in the midst of a bear market yet. So today I want to bring up two concepts. One is that of a trend versus a swing. Trend versus a swing. And secondly, what I'm going to talk about is how reversals come from the inside out. Reversals always happen from the inside out. Okay, so trend versus swing. Trend versus swing. So the question I would have on the table is, do we have an uptrend right now? On the daily chart right now, is that an uptrend? So some people might say yes, some people might say no. How do we evaluate something like that? Well, let's take a look, and right now what we're going to have to understand is the difference between a trend and a swing, and this will help us understand what's going on here. Again, our job as technical analysts is to try to understand what's happening with the market, what's happening with the supply and demand relationship, and whether or not things are either in accumulation or in distribution, so whether they're in buying or selling mode. A trend is a series of higher highs and higher lows, in this case, higher highs and higher lows, or a trend can also be a series of lower highs and lower lows, like this, a series of lower highs and lower lows all the way along here. Okay, so what's the difference between a trend and a swing? Well, a swing is just basically a connector in the midst of a trend. A swing is just a connector in the midst of a trend. So if you wanted to just build these out of Tinker Toys or Lego blocks or whatever you want, a trend, a full trend is going to be a collection or a series of lower highs and lower lows along here. And a swing is just going to be one element of that. So right now what we have is we have a swing to the upside in the context of a trend to the downside. Now, how do we get rid of this downside trend? Let's get rid of it. Let's just throw it to the gutter. Well, we can't do that easily, because what happens is, this goes back to rule number one of price action, is larger time frames dominate the trend. Okay, so how do we do that? Let's go over to the weekly chart. And now I'm going to ask you the same question here. What is the trend to the downside? Clearly, what is the trend to the downside? And it's quite simple to see that the trend is still clearly to the downside. Now, might this be an early indication of a reversal? Maybe. It might be, but it's just a swing so far. It's just a swing to the upside. It hasn't grown up to the point of actually being an uptrend yet. And this is where the larger time frames can help us delineate between a swing and a trend. So again, let's go back to the daily chart again and understand. Pull this down here. So we do have on the daily chart, let's get rid of this yellow line here. We don't need it anymore. It has served its purpose. Okay. So you can see right now that we're still in the midst of a downtrend, still in the midst of a downtrend. This is a larger time frame, lower high, larger time frame, lower low. We're just swinging up from the bottom. This is just a small swing from the bottom. It's a nice tradable swing, just like what I said a week ago. I said this would be a tradable bounce. But is it time to back up the truck yet? I don't think so. I don't think so. I think we're going to be dealing with these strong bounces in the context of a larger time frame downtrend. Now, the second thing I talked about is reversals start from the inside out. So what's this going to have to do to create a reversal? What's this going to have to do for Doc to give it any respect whatsoever? Well, what I want to do is I want to see this thing. I want to see the price. If we look at what is the most recent lower high, it's right around 9,000 or so. So what has to happen is a combination of these things. Either the price has got to get up and above 9,000. That's one way to do it. Or the other way to do it, and by doing that, what that does is that improves the probability that the next low is going to be a higher low. So if the price is able to break out and above this 9,000 level, then it will improve the odds that the next low is going to be a higher low. And we've started that process of shifting the trend, not just the swing, but shifting the actual trend to the upside. Okay, so that's one way that this can happen. The second way that this can happen is like this. For the price to come down here and have everybody assume that, oh no, it's all over, we're heading lower again. and then all of a sudden pivot and put in a higher high. So that's a higher low, that's a higher high. That too is a reversal back up to the upside. Again, the job here that the market has to do is it has to get a lot of people on the wrong side of the price action and then force them to cover as quickly as possible. So if you see the price pulling down again, the shorts are going to come out of the woodwork and start to load up again, thinking that here we go, we're heading down to 5,000. And you got to get them all on the wrong side of the price action. And that forces them to cover, and it helps provide the rocket fuel that pushes this price level higher. So, again, what we've talked about here is a couple of things. So, first of all, the difference between a trend, a collection of lower highs and lower lows, and a swing. A swing is just a member of a trend. So right now, again, what we have is a swing off the bottom. Great start. And then I followed through with part 2, which is what's going to have to happen for this to grow up and become an uptrend. So that's the deal on Bitcoin. We have, again, some of the same signals showing up on Ethereum. Ethereum, probably about 600 is the next lower high that it needs to pierce. So either way that this occurs, either whether it blows away 600 off of this swing or sets up a higher low and then eventually breaks out above 600. That's the level that we're going to look for. Ripple's tough to chart right now. So this descending pattern's breaking to the upside. That's good. That's normal. That's natural. We do have a little bit of volume here, so that's good. So everything's positive there. There's no false signals. Bitcoin Cash, kind of the same ugly looking signal here. Litecoin also potentially looking to set up a higher high here if it's able to get above and beyond, say like about 140 or so. That's a very good beginning. But you can see on Litecoin, again, just looking at the weekly chart doesn't show much, again, this is a big downtrend. This is a big downtrend, but with a higher low so far. So that's important. Reversals start from the inside out. If this is to go anywhere, if this is to set up a weekly higher low, then this needs to immediately reverse and start heading higher. Remember, be patient. If this market is going to be as strong as everybody seems to think it's going to be in 2018, getting the very bottom tick is not going to be that important. It's more important for a lot of people just from an ego and a pride perspective. But look, if you're playing along with the larger trends, all you need is just get yourself into the meat of a trend, and you can do very, very, very well, as we saw in 2017. Nobody caught the very bottom, nobody caught the very top, and they still did very, very well, as we saw by all the tax selling that we just had that seems to be over for right now. Okay, folks, let's keep it going. That's it for this weekend's report. Hope you had a great weekend. We'll talk to you Monday.